Hello, everybody. This is Stephen Gardner, best-selling author of Taming Wall Street, and I have a special guest on the line with me today named Greg Kesten, and I'm super excited to be able to introduce those that are listening to this conference call to Greg. Greg is the author of Financial Freedom: Finding What Works for You. He has a master's degree in counseling and has been a financial coach for nearly 40 years. That's 4 decades. And I know of no one better to help you monitor your cash flow, track your financial progress, or create a financial plan. And I'm just so excited to have Greg on. He's been a friend of mine for many years now, and somebody that I know brings value to the financial conversations that people need to be having today. So Greg, welcome to the call, and thank you for being on today.
Oh, you bet. Thanks for having me.
Now, we've been trying to put this interview together for many, many months now, so I appreciate you taking time out of your busy schedule to make this happen. And you know, this conference will be listened to by hundreds and hundreds of people, and I know that you have just a wealth of knowledge and decades of experience. And so I've put together questions that I think will pull good information out of you. And so the first one I wanted to start with was, you know, as I go through your book, Financial Freedom, which is just great. I love how concise it is, and just it lays out cash flow and all the positive aspects of good financial planning. But you say there that most financial habits, beliefs around money, and how to accumulate wealth are primarily learned from our parents. Is that a good or a bad thing?
Well, it just depends, doesn't it? We do inherit most of our beliefs initially from the ones who are closest around us: parents, aunts, uncles, siblings, school teachers, etc. Now, if our parents, for instance, are good money managers, good cash flow managers, well, then how fortunate that child is to learn how to manage money at a young age. Unfortunately, most folks, most parents are not good money managers, and they simply pass along those bad habits to their children. In my book, you might remember, Stephen, I said in the introduction that I spent the first 18,000 meals in my life with the world's poorest financial managers. And my parents were great people, but man, they couldn't manage money, and they certainly didn't teach me how to manage money. I had to learn that as an adult.
Yeah. I feel fortunate. My parents, they taught me how to be a good saver. And we'll talk a little bit more about that later in the call. I kind of became a paranoid saver, as your book talks about, but they instilled those good habits in me. But I know what you're saying. You know, we have the 1% in America control so much knowledge and wealth, and that information is not disseminated, or it doesn't. There's no trickle down economics from the wealthy to the poor. As we go through our government supported financial systems. I mean, I have, like you, I have a business degree, you know, all the way up through major university, and very little discussion on money. And so I like that. You know, the first 18,000 meals were not with great money managers. So yeah, no, that's an excellent point.
Yeah.
And go ahead.
I was going to say, and I don't blame my parents, because my parents simply managed their money the way that their parents or my grandparents managed money. It's just something that married couples tend to kind of work things out, and hopefully before they get divorced, they work things out in a division of responsibilities. But anybody who thinks that they're going to be raised by parents who are good money managers and will teach them how to manage money with great efficiency, no. That's a very, very small percentage. So most of us, understandably so, just need to figure things out as we move into our adult years.
Yeah, and sometimes that comes with the school of hard knocks of
Ah,
learning what not to do.
yes. No, you're being kind when you say sometimes. I would almost use the word every time.
Okay.
Every time it comes via the school of hard knocks.
Yeah, yeah, and hopefully you only have to learn that lesson once. As I've worked with hundreds and hundreds of families per year for well over a decade now, I've noticed most people have a hard time differentiating between needs and wants. As you do financial coaching and helping people lay out a vision for their future, um, do you see the do you see that as something that you also notice is kind of a hang up for people? Is this not being able to? I don't know that it's that they don't know the difference between a need and a want. They can't differentiate between the emotional desire to have
Yeah.
something. How does that
Yeah.
hold people back in life?
Yeah. Well, absolutely. Most people spend their free time thinking about what they want versus do I really need uh, what um, what I want. And some folks don't even care about what they want and need. Their focus is on how can I make more money. You look at someone like Warren Buffett is a good example. Is that he spends very little time concerned about his wants and needs, and you look at his lifestyle, and it demonstrates that. But he is always thinking about how can he make more money, and but he's an exception. Most folks just want to live a good life. They know what they need. They do have some wants, but they struggle with prioritizing what they really want. Because see, if someone has a want and and everything is a priority for their wants, then how do they decide what's really important? See, if everything is a want, then nothing is a want. Does that make sense?
Okay. Yes.
Yeah,
No, it
yeah.
does.
So what I do is I help people get clear on, okay, you've established your needs. Tell me, what are a few wants that you don't yet have that you would like to have? Well, we'd like to
Yeah.
put a down payment on a second home, a vacation home, or we'd like to take the kids for an entire week to Disneyland or something like that. See, those could fit into the wants. Do they need a second home? Do they need to take the kids to Disneyland? Do they need a brand new SUV? Not necessarily, but everyone, I suggest, should be aware of those next two or three wants that they might have so they can start to get a clear idea of what they want, how much they're going to need to purchase that want, and when they want to acquire that.
Yeah. No, that's interesting. As you were talking, I got thinking, I wonder how often someone's want is, I want to retire one day. I want to have financial freedom. I think
Yeah.
most people don't get to those wants because they're trying to cover their base needs, and then, like you say, everything becomes a want. But are those two wants big enough
Yeah.
to want to save money and control your cash flow and stick to a financial plan? So, oh, and that's why it's so important to have a vision for your financial future. And I know that that's something that you put together with every single coaching client. Why is that? Why is that like one of the number one things you do with people? Why is having a financial vision of your future so important?
Yeah, not only because I've seen what a financial vision does in the life of an individual or couples, but almost everybody does not have a written down, clear vision of what they want their money to do. We've all been in airplanes before we're sitting by the window, traveling across the country, and here we are at 35,000 feet going over Nebraska or someplace, a state like that, And we've all had that wonderful vision, haven't we? And looking down at all the farmlands and the horizon and the blue sky and the clouds and so forth, and we say, you know what? I have a better idea of what I want to be doing with my life just looking out of this airplane window and seeing the possibilities. So what I do in the financial vision is I help clients understand that a financial vision is positive, first person, present tense, emotional, and visionary. And what we do is we bring the future into the present. And when people can visualize their future in the here and now, they get excited. Plus, it gives them a North Star, so to speak, in their financial journey. They have a direction. They have a purpose, a heading, so to speak, of where they want to be financially. Financial visions, having a financial vision is absolutely crucial in having a good financial plan. Financial plans crunch the numbers, and those are statistical and they're factually based. A financial vision is where you project your heart and mind into the future and bring it back into the present.
Yeah.
Powerful.
Yeah. One thing that I do in my own retirement planning practice is I try to help people catch a vision for the power of consistently saving money coupled with compound interest. And so if you ask somebody, you know, if you were to save $500 a month at 5% interest, how much money are you going to have 30 years from now? And most people go, I don't know. I hope a lot. They don't have a vision for what that looks like. And so when you pull out a calculator and you start plugging in those numbers, all of a sudden they've got a vision of the future and they go, oh, wow, okay. And yeah, you pull it back to the present and they go, I don't want to miss that $500 saved per month or $1,000 or $10,000, whatever the number is. I don't want to miss that because then I miss out on that principal coupled with compounding interest over time. And all of a sudden, like I see the light bulb go on in people's minds and they go, oh, okay, that's how you get to $1 million or $500,000 or $10 million. You help them have vision instead of just eyesight. You know, they've got to really be able to visualize it.
Yeah, that's a good point. Vision, not only eyesight. I have a 4-point sequence I share with people that if they really want to have financial well-being, here's the 4-point sequence. One, once they acquire some money, the first thing is they share a part of everything they make with the charities of their choice. Second, they pay Uncle Sam their taxes due. Third, they save a part of all they make for their future needs. And fourth, then they live on the rest.
Yeah.
Then they live on the rest. I don't try to hide this from any client. Is that, hey, look, if you do the sequence correctly, so you'll always have money and be financially secure, you're going to be living on about 60 to 70% of what you make.
Yeah.
Are you willing to live on 60 to 70% of what you make? And if they say, no, we're living on 100% of what we make and we want to keep doing that, I really can't help them.
Yeah.
Yeah.
Yeah. Yeah. No, but having that vision helps people go, okay, now I see the importance of putting money aside. I think, especially with younger people, I know, most of my clients are on the older, they're 50s and 60s. They're not these millennials, and I know you're kind of the same way. But sometimes when I deal with younger people, they get caught up in this, YOLO, you only live once, and then because bank rates have been so terrible for over a decade, they're like, what's the point of saving? I could have $100,000 and at the end of the year I make $100. What's the point? So they don't have that vision because they also don't have that support system. But
Well,
You know,
and
and that's a, go ahead.
I was going to say, most 30-year-olds don't know what it will be like when they're 60 years old, but they'll live to be 60 years old and longer. But at 30
Yeah.
years old, it's hard for them to get their arms around actually being in their 60s, and so consequently they just YOLO. They
Yeah.
spend their money as if they're not going to live to be 60.
Yeah, I agree. Okay, now you've been doing this for 37 years, I believe you told me.
Yeah,
I'm you've probably seen patterns or common pitfalls in that 37 years. What would you say are a few of the most common pitfalls when it comes to financial planning that people need to be aware of and then correct?
Yes. Okay. Yeah. I started in February of 1982 when I left the Air Force after my college commitment with them. And so since February of 82, and with my counseling background and degree, graduate work, it's just very interesting. You get all kinds of folks who are doing things correctly and doing things that are not well advised. And probably the most common pitfall financially that a person makes is they don't keep track of where their money goes. And I've got clients who are multi-millionaires, and I've got clients who make $60,000 a year and have a couple $100,000 net worth because that's what they are happy with. And the principles are the same. I've got a client who makes $40,000 a month. The challenge he has is that he likes to spend $45,000 a month. So he is consistently $5,000 in the hole each month. So how does he make it up? Credit cards, HELOCs, borrowing money from banks and so forth who love to lend this guy money because he's a good risk and they charge him a high interest rate. And so who is more financially secure? The person who makes little and lives within their means, or the person who makes a ton of money a month and lives outside their means? So that's probably the most common pitfall I see, is that It's not about a person's net worth. It's not about the amount of their cash flow. It's, do you keep track of where the money goes once you've received it?
Yeah, and I know that there's a budgeting method where you assign each dollar a job, whether that's these dollars paid my mortgage, these dollars pay my taxes, and these dollars pay for my future financial freedom. But if you don't have an assignment for that money, then it just gets spent. And so you have to have a location and an idea of where you want that money to go every month.
Yes, and you mentioned an assignment. I would say priority, right, would be another word we could use for that. And if a person does not know where their money is going, 100% of the time, they end up spending more than they make. I've never seen an exception to that.
Yeah.
Interesting, huh?
Yeah, it's not like I had no idea where my money was going, and it just ended up in my retirement account.
That's right.
That's never happened.
Yeah. It just keeps building in my cash value life insurance. I don't know how it gets there, but it does.
And we've talked about this privately, and it's worth addressing. But just the importance of cash flow. Maybe you could speak to the idea of controlling your cash flow, why that's so important.
Yes, I really believe that the most important financial plan form, or even any financial form outside of financial plan, is the cash flow management. Cash flow management is king cash flow management is everything in a person's financial life. If they can't or won't, sometimes it's won't, if they can't or won't manage their, or will not manage their cash flow, their financial future will be volatile at minimum, and they're going to be missing out on so many things because for whatever reason, and I can have empathy with everybody who doesn't keep track of their cash flow, but for whatever reason, if they don't, they are setting themselves up for financial problems, and they know that painfully first person. I know that by just observing them on the chaos that they have in their finances. So cash flow is everything. If someone said, okay, Greg, you can only have your clients do one form in their financial plan. All these other forms you do, net worth and financial risk and investment assets and everything else, what's the one form that is the most important form in the plan? It's cash flow management.
Yeah.
So.
Yeah. Cash is king and cash flow planning is king.
That's exactly right. That's exactly right. And I never use the B word in my planning. I never use the budget word because budgeting is to wealth what dieting is to health. People don't diet themselves to health. People don't budget themselves to wealth. What it really comes down to, are you managing your cash flow? Dollars in and dollars out. Yeah.
Oh, I love that. That's a nice little catchphrase.
Yeah.
Okay. A lot of your clientele that you coach and protect and help over the years, they're typically in that older demographic, like my clients are, where they're 45 and up. They're now maybe the children are starting to move out. They can focus a little bit more on themselves and become a better saver. In my business, I don't take a lot of risk, so I do a lot for my wealthy clients with tax planning and savings through these specially designed cash value life insurance. We do a lot with their lump sums of money through these growth-focused annuities, these private platforms that I have access to. But as you're working with your clients, maybe talk about why having a program that protects your principal but still gives you the potential for growth is so important as they approach retirement. Every year that they stay alive and work, they're closer to that idea of walking away from it all, living on their own terms, having that financial independence. Talk a little bit about why that's so important as people approach retirement.
You bet. Well, most people want to have stability in their life and in their finances. And one of the best ways to have stability financially is to not put your principal at risk. And there's plenty of great avenues like cash value life insurance, fixed tax-deferred annuities, and so forth, that you don't have to worry about what the stock market is doing or how the tariffs in today's market are going to affect your investments, or who might be president or who's not president, and what's the economy doing and not doing. The cash value life insurance and annuities, they are the stability in the financial world. Guaranteed principal, guaranteed interest. And as you know, I've got a cash value life insurance policy that I purchased, about 20, 25 years ago, and I love it. I don't worry. I never worry about it, and it continues to grow for me. And I'm not concerned. Will the market affect it? No, it's fixed principal, fixed interest. So it will be another income stream for my family when we want to pull the trigger on that sometime down the road. So, and if we never need the cash value or we never need the money, then of course it will go to the charities of our choice and family members. So, safe money programs are best financial programs around. And over time, interestingly enough, over time, almost all of those safe money programs beat in the return those who were in the stock market.
Yeah, it blows me away. I have a doctor client in Texas right now, and he has one of these growth-focused annuities that's guaranteed to not lose. But he's up 9.4% for the year, and he's just thrilled. He's just thrilled, you know. And if all of a sudden the bottom of the basket fell out, you know, the worst that can happen is he drops back to whatever he started the year with. But you know, you get to lock that in over time, but you know, I have another chiropractor, and he just introduced me to his mother, who's in her 80s, which is always such a compliment, right? If someone's willing to introduce you to their mother, you've done something right. But anyway, we were reviewing the plan that they have with this Edward Jones advisor down there, and my question to them was, why does this advisor have your 83-year-old father and 80-year-old mother in stocks that carry 100% risk? And he said, I don't know. I guess I didn't realize that they had that much risk. I said, okay, you know, your parents aren't using that money very much, and their greatest hope is to pass that on to the children and grandchildren. Do you think your mom and dad really care what that money does over the next 2 or 3 years? Or if the market were to drop 10, 20, 30, 40%, would they care more about not losing money than growing money? And he said, absolutely. If they lost 20%, they'd wipe out over a decade of their money. Yeah. And so, you know, we're now putting them into a position where they'll have that safety net, but also still have the ability to grow. So yeah, no, I agree with that. Now, okay, I want to keep us on track, because I get going on these stories. I'm just like you. I'm very passionate about helping people. But one thing that you talked about in your book, and this resonated with me, is finding that balance between being a paranoid saver and a spending addict. And this is like, you know, very telling of my marriage. My wife is definitely not a spending addict, but she came from a background where spending money was much more loose than what I grew up with. And so I kind of became a paranoid saver, and I've had to work through that over the last few years and change my mindset on things. But maybe talk about that for a minute, because I know you deal with that with, you know, all of your clients each week.
Yeah. You know, balance. I love that word, balance, where when a person is really seeking balance in their life, financially, for instance, not only are they savers, but they're spenders. But they don't need to be a paranoid saver, and they don't need to be a spending addict. Those are the two extremes. But again, you keep those 4-point sequence, that 4-point sequence in mind. When you have $1 in your hand, in principle, you make your charitable contributions of your choice. You pay Uncle Sam his taxes. You pay yourself because you need to, and then you live on the rest. Now, the paranoid saver is a minority person. Typically, people are much more addicted to spending than they are saving. But both are hazardous, not only financially, but also to a relationship, i.e. a marriage. So a quick example. I have a client here in Utah where the husband was a real paranoid saver. He was a pharmacist, and he saved every dime he could. Well, one day when I was visiting with them, he needed to excuse himself for a moment, so he got up and left the office, and his wife is sitting there with me, and she said, Greg, is there anything you can do to influence my husband to spend more money on the family? We would love to go on a vacation. We would love to have a nicer Christmas. We would love to do more things as a family and with the kids, but he just won't let go of any of our dollars to do so. And she pleaded with me, please, is there anything you can do to help him share more of our money with the entire family? Mm-hmm. So anyway, I remember that because I felt so sorry for her. The good news is I kept telling them, you know what? Yeah, you're making a lot of money. You've saved a lot of money. What's next? What should you be doing? Well, to round out the story, they started going on an exotic vacation, just the husband and wife, every 6 months, and they've been doing it now for the past 15 years. And they've had some wonderful exotic vacations around the world because Dennis moved away from his paranoid saver mentality and decided that it was okay to spend more money on the family. So that was a great story. But he was paranoid. But because a person's a certain way at this time in their life doesn't mean that they will be that way all their life.
Yeah, and I think for me, I know looking through our own numbers, what helped me was sticking to my plan, but part of my plan was working in the vacations, working in the bigger purchases, and so it allowed me to stick to my plan, but it also allowed me to be, a little bit more free and have more fun, and so I think that that's part of the coaching, is having somebody that says, hey, listen, you can take some of this money. It's not going to destroy your retirement to go have some fun with your spouse. And that's one thing that I love about having a coach is somebody from the outside that can see an error you're making, whether it's a tennis match or bowling or, business or whatever, a completely independent outside person saying, it's okay to do this, or you need to put a little more emphasis in this direction. That's why having a coach is so important. Okay, now, that I am a believer in coaches. It's one of the reasons that I like working with you and wanted to have you on. I think coming up with a plan is incredibly important, but the value that I really see in a coach is having that voice that helps you stick to your plan. So how do people stick to a plan with you, and how do they course correct when the economy changes or work changes or their goals change? How do you insert yourself into helping people stick to that plan?
You bet. The way I do that is through a very systematic way, and that typically when a new client starts with me, it will take 8 to 12 one-hour sessions to get their arms around their current financial situation, to establish a plan, priorities, goals, objectives, etc. But as we start to move on from 12 sessions to the next 4 sessions, we get to a cruising altitude, I like to call it, to where we start to elongate the frequency of our sessions to where eventually when a person has their financial plan established, they understand it, they know how to work it, we've spent many hours together, we go to a quarterly, once every 3 months, maintenance session. And in this every 90 days maintenance session, the first things I ask them every 3 months is, anything new with you, health-wise, family-wise, work-wise, finances, etc. And we just roll up our sleeves and we do any course corrections that are important or necessary. And I've got clients who've been with me for well over a couple decades, and every 3 months, I just absolutely love getting together with them on the phone, because most of my clients live out of the state of Utah. So we get together on the phone, we go over the routine, we look at the plan, we make course corrections, and I'm able to help clients retire much sooner than they really anticipated and have more money than they thought they would ever have. So it's a very fulfilling niche in the market to be a financial coach, because I'm totally objective, third party, and unemotional about their situation.
Yeah, that's a huge plus, because sadly, I go to these financial conferences where I think I'm going to get education, and almost the entire conference is about AUM, assets under management. How do I get more money under my name? And they do these contests. Who brought in the most AUM this month? Who brought in the most money? And the focus is not on what's best for the client. It's on just getting that money so that they can collect their fees. And that's what I like about a coach. A coach can say, okay, what do you want to do? Real estate. Okay, let's go down the real estate path. Yeah. Oh, I want to do the cash value life insurance. Let's go down that path. I want to look at doing whatever it may be. You can do the research and come. They're paying you to have their back and to come back with good information, not with the product that Edward Jones is pushing that month, or not with the stock that the money manager is saying we need more people buying X. It's very biased that way, and that's what I think a coach is very important. Is there is this unbiased. Hey, you're just paying me to help you get to your goals as fast as possible and to keep you on track.
That's right. That's right. And when people say, well, what do you do for work? I'll say, well, I'm a financial coach. And they'll look at me and say, well, what does a financial coach do? And I say, well, I'm a teacher, an educator, and I help folks reach their goals much sooner than what they anticipated. I don't represent a company. I only represent my clients to the marketplace, and I'm third party, totally objective, and unemotional about their situation. And whatever they want to accomplish, I can show them how to accomplish it sooner than they thought possible. Typically, it does take some work. It's not something where they purchase something from me and then just hope it works out. No. They need to roll up their sleeves like I do in their behalf, and we walk down this financial road together, making sure that all the T's are crossed, the I's are dotted, there's balance and diversification in what they're doing. They're accelerating, reaching their financial goals. And it's been very fulfilling, because I've been doing this since 1982, and I've got, oh my gosh, I don't know how many firsthand stories of success, of people who really do this correctly, do their financial planning correctly, and see the fruits in their 40s and 50s. That's very fulfilling.
Yeah, no, I know how passionate you are from just many long conversations, and so I want to wrap this up. If somebody wants to get a hold of you, Greg, how would they go about reaching out to you?
Oh, the best thing is just go to my website, and my website is www.financialfreedom, all one word, financialfreedom.co, Charlie Oscar for company, financialfreedom.co, and just peruse my website, and if they think that I might be able to be of service and of value to what they're trying to do, they can just shoot me an email, and I will give them a free financial coaching session. In other words.
Oh, that's generous of you.
Oh yeah,
they should mention that they heard about you from Stephen Gardner.
Yes, that would be great. And of course, if they contact me, I'll be able to get a book, one of my books in their hands, and I'm a pretty easy guy to get along with. So I'm not there to be a judge.
I can second that motion. Well, thank you very much for being on. Greg is fantastic. For those of you listening, you can reach out to him, financialfreedom.co. If there's anything I can do to help you with your retirement planning, please reach out to me at yourbridgeplan.com. Otherwise, Greg, thank you again for being on today's call.
Yes. Okay. Thank you, Stephen.
Okay. Bye-bye.
Bye now.